All right, so Monday markets seem to bounce, but not that much. Metals seem to drop, but they recovered a bit. Silver to me kind of outperformed gold if you compare to what you'd normally expect on a retracement. And the miners definitely outperformed the metals. So actually pretty bullish drop, if you want to call it a drop for the metals. Very bullish actually. I mean the GDXJ was, I think it was green, end of day. So GDXJ outperformed GDX. Silver arguably outperformed gold. Um, and this is, not the worst retracement. This is after basically a bit of a topping. And for me, the best case scenario for those that hold gold miners like myself and who don't own gold, and there aren't that many, I reckon, because normally if you own the gold miners, you own a bit of gold and or silver. But is to have gold and silver drop and the miners not drop or even go green. That's the best case scenario because you're making money whilst the underlying metal is going down. And it kind of had that yesterday. The markets bounced, but gave up quite a bit, I would say, and it's all based on the banks. It's kind of what I thought. It was one of the scenarios I expected. On Friday, or I think I did a video on Saturday. I thought, okay, look, if the markets bounce, they think the banks are rescued, which I don't think they are. I think even this week we'll probably get another bank starting to make the headlines, maybe Deutsche Bank, or maybe just a small bank, but I think there was this bit of a hurrah Monday that everything's fine, so the markets go up, but reality kicks in later. So let's look at the markets. S&P, here we go. Opened, slightly gapped up, closed lower than it opened, basically unchanged. Essentially closed where it closed on Friday. And remember, Friday's close was high of day, so you really expected a bit of a move higher. I mean, I expected a move higher, and we didn't even get to test the descending trend line. So for me, the S&P kind of, I don't want to say bearish, but not bullish at all, sideways action. And to me, we're just going to go lower. We're going to drift lower and touch this prior support eventually. Nasdaq still failing to test and even break and even close above this resistance. If anyone was going to make it, it was going to be the Nasdaq. Look at this close high of day here. You really would expect at least to touch this. Didn't do that. Closed red, right? The only indice that closed red. Almost down 0.75%. Dow Jones, okay, moved higher. Didn't tag the descending. Okay, didn't close unchanged. It did close up a little bit, but nothing too special. A bit like the S&P, I'd expect this to go lower. Remember, this has been weaker than the S&P recently, so if there is a move down, it takes maybe 1 or 2 trading days, and we're straight away back at the lows. Russell, which has definitely been the weakest, it moved up the most, which makes sense. It's the one that's been destroyed the most, so the one to rebound the most, but that's not exactly the healthiest rebound. Yes, it was up over 1%, but think how much it's dropped. Look at this massive sort of reversal, close near high of day, and all you've got is this sort of doji. Yeah, it's up 1%, but still, if we get a reversal today, which I think we'll get, a move lower in all the markets, the Russell, just like the Dow Jones, is 1 or 2 candles away from testing the lows. And remember, if we test the lows here, we're basically going to break it. A close below here, we're going all the way down here. So you could say even this week we could touch the all-time lows. I mean, it would call for a pretty horrendous next couple of trading days, Tuesday, Wednesday, Thursday, Friday, but it's doable. From where we are now, 6% move, you can get 2% move in 1 or 2 or 3 days, and you're there. So yeah, I think that the close wasn't the best for the markets. I think fundamentally you have horrible um, macro for the markets, basically worst case scenario. So for me, the markets are going to go lower. And Friday's setup was, it was ideal for the bulls. Sort of, we've dropped a lot. We've closed a high of day. Time for a strong short. Nah, it didn't happen. The VIX. I mean, this makes no sense. It should at least have closed a little higher. This is ridiculous. No one's learned their lesson. Who is shorting the VIX here? How is that volatility? I mean, this is. I mean, I don't know. You should just buy the VIX. To be honest, buy once here, buy down there. Even though for me it's broken, I wouldn't touch it. And for me, gold and silver are more of an indicator of volatility than the VIX. But this is really risky stuff. Selling, shorting here. What? You know what? Just before moving on to the standard rates, dollar, and then commodities. I'm just going to check the banking stocks very quickly. Look at this. Reminds me of the Russell. Closed a high day on Friday. Reversal just closed above the prior support zones. And you've got this sort of attempted, whatever, shooting star or something. But this is not going to work out for me. For me, the banks, the close wasn't the best either. And that's the XLF. That's the seniors. But the KBE and even the KBR I should actually put up. But look, still within this sort of mini resistance zone. If we start to move back down again, close this gap, I think we're going to have a candle just sort of in between these two, Friday and Monday. And then again, just one more down day and we're making new lows in the banks. And all the other senior banks, that's not really the best rally, considering how destroyed they've been. Look, Schwab is on my radar. That one really you have to watch out for. Deutsche Bank. One or two more trading days, and we're just sort of in the vacuum to test the lows. So yeah, watch out with the banks and the markets. Now let's look at rates very quickly. Zoom in a bit. Yeah, so interest rates seem to go up as the markets recover, and interest rates seem to go down when the markets are dropping. That's the opposite of what we were seeing before. That's purely because now we're in a different environment where bonds are being bought, so interest rates are being sold or are coming down when there's trouble in the markets. So, since I think the market's going to come back down again, I reckon we're in a bit of a zone here. But you could say, I don't want to redo this trend line, but you could say this sort of area here on the 1 year is the new sort of zone. I'll delete this one. We're starting to form a bit of a pattern that we can trade by. You can see this sort of zone here for the 1 year, the 2 year. I'm going to start doing rates a bit quicker because it's not in focus as much for me. It doesn't determine the markets that much, and you can't sort of trust the zones as much. It's more the indices themselves. You start to flush new lows in the markets, then bonds are being bought. So they're not leading the way for me. So I'm not going to put too much time into them as I used to. They used to be the leading indicator. I was saying we're going up and then the market's going to crash. That's what happened. It's just the markets crashed and then bonds were bought. Everything flipped. So the 2 year, I'll just sort of leave it like this. But you can see the 2 year, that didn't really recover that well. So in the end, it looks like we're going to go back down again. Rates going back down again. So bonds are being bought, maybe in anticipation of the market going back down again. 5 years, same sort of pattern. I'm going to delete this. No longer valid. Keeping it extra simple, extra clear. Let's move this a bit lower. 10 year. Yeah, this ascending is probably one of the only ones that's still valid, but still didn't touch this. Yes, that's really the horizontal support for me. Yeah, I mean, watch out. If we come back down again, think about the 10 year. After 2 or 3 more trading days, we start heading this. Maybe the ascending starts to come into play. We start to make new lows. I don't know if it will bounce from here. I'm not sure how much this ascending is gonna play out, because I mean, for me it's relevant here and here, but we haven't touched in a while, so I'm going to keep it in there. But if we start to move lower in yields, so if 10-year bonds, which is really the ultimate safe haven, let's say, they start to get bought to a point where yields go below this 3.3%, we could start to have a real flush. Again, I don't know how much this ascending support is going to play, but that may mean the markets go extra low. That's when maybe the Russell, for example, starts to hit new all-time lows. So watch the 10 year for me is a bit special. This ascending no longer in play. Good. I think I'll keep this here. So generally, this should hold out a bit more than the other yields. But yeah, for me, the 10 year, the 2s and the 10, even though bonds have sort of not been as easy to read in terms of charts, the 2s and the 10s, you can probably read those charts. But again, they sort of, for me, they're a lagging indicator of what's going on in the markets to fear. Right, let's look at the DXY. Already today, I'm doing it very early, like 6 in the morning in Europe right now. I fell asleep yesterday, so which makes it harder for me because everything resets. But look at the DXY, I did say, look, we're bouncing. We bounced, especially after this hammer here. We bounced, we tagged this prior support. Were we going to touch this descending? No, we didn't. We dropped already yesterday. And, that's another thing. Yes, gold and silver was, you know, not the biggest drop yesterday, and the miners outperformed everything I said in the intro, but the dollar was down. So it would be better if the dollar was up. Then you could say, okay, gold did what it did, the precious metals did what they did, despite the dollar being up. So, but in this case, the dollar was down. So that means really gold and silver were definitely overbought and needed to come down. And that's something we'll look at because the charts also indicated that. But look, it looks like the dollar wants to go back down again. Obviously, we're not going to slice through here, but around this zone, prior support, let's say about here. This we can delete, by the way. No longer valid, right? Because it was when we first came here, sort of closed there, but then, we retrace and now back down again, no longer valid. So the only support for me is a 102. And if we break that, it's the 101. Let's call it 101. I'll just move this here. And obviously the descending remains in play the whole way down. Oh, oops. The descending will remain in play the whole way down for me. So something like this. This is all I need. Very simple, but for me, very correct. So let's see what happens. Do we bounce at 102? We bounce at 101. And plus those numbers are very nice, round numbers. They make sense. Every 1 unit. So let's see, the day is very young. You could just have another hammer and then it starts to look very bullish. So I'm not going to start predicting unnecessarily. The chart will do it for me. But for now, we tested this resistance. Didn't even tag it, but let's see how far we go back down again. If the dollar does come back down again and start to make new lows to 101, I reckon gold and silver will not be at 2,000, by the way. I think they'll be just underneath 2,000 at 102, but at 101, yeah, you're going to be testing 2,000 definitely. So, and silver will probably be at 24 or higher. So the dollar is, for me, a lot more important than yields. It used to be the other way around. So I'll be paying a lot more attention to the dollar. But now let's move on to commodities. So copper. Yeah, so copper made a nice move back up here, catching up with the rest of the commodities. Well, the metals, let's say in particular. Now this move was very nice. We hit resistance, so a small sideways consolidation day, but already you can see how strong it is. It had to sort of give back something here. And then the next day, nice hammer. So that was yesterday, Monday, nice hammer. You could say follow the markets, but to me, this looks very strong to the point where I think it could go higher even if the markets go down. So copper's been, I don't want to say the hardest thing to read, but during this period, it really was. It didn't even make sense. Then, this breakdown, this reversal, I understand a bit. And now the chart's a bit easier to read. I can say this is bullish. It hasn't broken down. It's showing more strength here than during the breakdown, more consistently too over several days. It's not just 1 or 2 reactive days. And this looks like it wants to really coil and go up. Obviously, anything can happen, blah, blah, blah. But to me, this looks pretty good. And if you think about a copper, one of the bullish theses out there is for copper. I heard a lot of people more bullish on copper than gold and silver. So I think it's also catching up with its siblings, gold and silver. So definitely 4.3, I reckon, is something that can be a target. Natural gas. This is very interesting because this is very interesting because the trend line's already done. Nothing to add, nothing to retweak. We've sort of come. Go on, let's just zoom in a bit better. Come all the way back down again. For me, this is sort of ready to spring out of this descending line. I'd expect it to have already done it by now, but it is what it is. It is obviously possible that it just starts to break down and go to new lows. I think a lot of people, a lot of smart people, if I can say that, are buying this drop. There are a few other technical traders that I follow that have also bought this zone now. Just like me. I didn't follow them, they don't follow me, but we just happen to have seen the same sort of double bottom area to buy of interest. It kind of makes sense when you zoom out. What the hell? How can you not see this as a possible entry zone? But it's hasn't done it yet, and it's definitely possible that we start to touch this 210 and drop back down to 2. And you know what you could have? You could have a very strong hammer reversal, and then it really comes out a bit like this area here, you know, when it started to flush, then strong reversal. So I wouldn't be worried at all. In fact, I would invite any drop because below two, if we even get below two, I'm looking to buy again. That simple. I mean, I've doubled my position in natural gas, but it's not that unbelievably strong. I mean, it's not even worth more than Newmont. So for me, so natural gas, very interesting. Should go up. Great buy zone. If it goes down, I mean, again, I'd give it some space, right? It's always the same philosophy. I'm not gonna be blindly bullish and say, "Oh my God, I can buy now even lower at $2." At two, I probably wouldn't buy it because I bought it already around here. I bought the NGA S. I always forget the LSE ETF, but NGAS I bought. So, but it doesn't matter. I bought, you know, the first buy was around here. Let's call it 2.6 ish. Second buy was around here. Let's call it 2.2. It was a bit higher than where it is now, 2.25 or something. So, you know, 2.25 is my last buy. I'm not going to buy it 2. I mean, I could, but I'd probably prefer to buy at 1.8 if it gets there. And if it doesn't, I may chase, you know, around 2. I don't know yet, but I don't need to. When you zoom out, it's the same area. You know, this whole area is the same. So natural gas, very good entry point. Oil, yeah. So this hammer here on Friday, I thought, look, that's very strong. Looks like continuation is in play. And look what we get on Monday. It's just a perfect candle. Opens at this low, closes at this high of day. So I thought yeah, low to mid 70s. So you can see now it closed above this trend line. And this is about a trend line, in my opinion. Maybe I can be extra precise and put it there, but it still did it. It still closed above it. For me, mid 70s, but it's not going to go all the way up here without a tracement. You can't. I mean, I understand this all the way back down here. This was very clear support to me. In fact, I would call it the perfect trend line. It really worked. And it worked when it looked bad, and a lot of people were thinking, oh my God, we're going to go lower. The usual. Look at this beautiful move back up, retracement, but strong buy on the retracement. So follow through. You can't just go all the way. It's like you can't imagine a candle just going all the way up, straight through 80s, straight to 90s. It's not going to happen unless you have Saudi Arabia invaded, or you know, if 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 there's no event like that, it's just going to go up a little bit, retrace, maybe up again. And then you can start to think about, okay, maybe it's time to pop our head above the 80s. But I expect mid 70s resistance if we even get there. But we should hold this zone. This candle on Monday was quite strong. So I don't think you're going to give back too much today. So maybe mid 70s. But anyway, otherwise, the oil kind of did what I thought. Uranium, so far it's holding, right? So that Friday was a decent candle, but it's not the strongest hurrah in the world. And anyway, it was a red candle because look, you closed here on Thursday. So although it's green here on TradingView, it was a red day. It's just that it closed a higher day, and you know, so it's kind of a slight reversal. But Monday's candle again, small green, but this is not the strongest bounce. And you know, look at where it is. You've got these two candles here testing this pivot long-term trend line, and then 4 or 5 days later, you're testing it again. Now I know it did it here, and I said that already, but to me, I mean, look how many days we're sort of, I don't know, 10 trading days maximum away from being forced out of this little pennant here, whether it's up or down. And to me, I don't know, it's a flip of a coin. I think down. I think down because we're down at the bottom at the moment. Also because we're sort of testing it again after already having tested it. And because uranium seems to have been following the markets lower recently. And I think the markets are going to go lower again. And I think focus is elsewhere, you know, gold, silver, crypto. I mean, uranium is a bit of an alternative play. So I know there are a lot of people out there who trade uranium, but sometimes you just got to get destroyed even more before you come back up. So if I just zoom out a little bit, you can see the potential for a smash. You know, a lot of people are seeing this chart. It's kind of obvious chart. And if you start to flush this, you get a really nice smash. And then there's probably a very violent reversal. just as the chart looks horrible, like around 15 or something. I don't know. Yeah, there's probably reversals just before, but once you start to get then you start to buy. That would be great. That's really what I would want, a massive flush of this huge pattern, and then it reverses, and then eventually it will come up and start to take out this descending. So for example, imagine, now I'm just dreaming a bit, but imagine, we basically flush this, whatever will bounce a little bit, and then it starts to get, and then here, this is not the best representation of what I meant, but then it starts to bounce violently, whatever does its thing, and then we start to touch this zone again, and then we break out of it, and then everyone becomes bullish, and then we're talking new trend lines, this kind of stuff, and then we're straight back up here, probably based on news. Germany now adopts nuclear power, and whatever, America and Japan, etc., Europe, all go green. They start labeling nuclear power as green and the usual political trash. So uranium, I hope for a breakdown, because I'm not in it, but I also think it's definitely possible. You can see why. And we're very close to a decision. Now, obviously, it can just break out of it, and then we're starting to look at this descending line, and then these trend lines still are in play, whether we break down or break on the upside. Eventually, these trend lines will come in play. So uranium, very interesting. I'm keeping my eye on that. Imminent moves. Now, gold and silver. So gold, you can see Friday, there was this drop, closing a low of day, and expected a bit more of a low move. That's why I started to put this trend line in. We didn't touch it yesterday, and we recovered a bit. I think we're trading within this channel now. I don't expect us to break below 19, let's say 1930. Not today anyway, because of yesterday's recovery, because of where I see the dollar going also, and because of where I see the markets going. And so far, gold is still moving totally in opposite to the markets. So, well, I'll leave it there for gold. Let's just see what happens. But, 1 or 2 trading days away from 2000, 1.5, 2 days away from breaking below 1930. And if we break 1930, you can see where I think we go. 1880, not in one day, but I don't know. I don't see it really hanging around 1900 either. So yeah, bit of a level lower if we do close below 1930 on a daily. But I think we're going to be trading within this channel, and I think we may actually venture back up at 2000 again, just because of what I saw yesterday. Yeah, let's see what happens to the markets. It's all about the markets. It's actually because of what I think will happen to the markets that I'm judging gold. Silver, look at that, very nice recovery. Very nice recovery. Been outperforming gold on the way up recently and even on the way down. I know it moved maybe in percentage terms a little lower than gold, but it should have been more. So, and if we move up, honestly, if we move up, I see silver just taken out 2350 before gold tests 2000. So I reckon, we will have repriced. So silver will be at, I expect it to be around here, basically testing this descending zone 2450, whatever, this kind of area, if gold's at 2000. And if gold closes above 2000, then you may actually have silver sort of here, closing above this, even this wick here, but more importantly, closing above this descending line. So if you have silver closing there, that's just beautiful. Then I think we're going up. Plus gold will probably be testing 2080 very quickly, because those moves are not, they didn't take long. With gold at 2000 going to 2080, I mean, these are small percentage moves. Well, still 3%, but $100 in gold is not what it used to be. So let's see, on the way down, silver, yeah, if we start to lose 2280 something, it can actually accelerate quite lower, quite fast, I mean, but I'd expect it's going to be this zone or this zone. I'm not actually sure where it would accelerate down to. I think it would be an area. It'd be sort of this area here. Maybe not this trend line. You know what? I may delete this trend line because I don't think it's valid. It's hard to tell. Well, this one is because the low of this entire base, but yeah, I would say around this area if we move on the downside. But let's see, the day is young. I still think that if the markets go lower, we'll actually start testing the upper range again. Now, more importantly to me, the miners, let's look at this. You know, for me, I'd love gold and silver to go down and the miners to keep doing what they're doing here because I'm in the miners. I'm actually not in the metals. I mean, I think I own 1 or 2 bars, but you know what I mean? That used to be a lot more in gold and silver. But the miners are fantastic. So yesterday we went down initially, but look at this recovery. If I just do the 15-minute chart, maybe look at this. You know, we gapped lower with the metals. Okay, I thought it was gonna be the usual sort of they follow each other down, and we've had a big run up. So here comes time for a smash. But you know, look at that. We closed the gap, and then we close a higher day. The GDXJ even closed green. Look at that. We're basically at the highs. So gold's dropped, what is it, $40 or something? Even 50, you could say. And with the same place, that's literally the miners not just outperforming, but catching up, repricing relative. So, you know, if you zoom out and did sort of GDXJ versus gold, which I'm not going to do, I could do, you just see the chart just scream up the last 1 or 2 days, or actually the last several days. It should anyway. So for me, this is beautiful stuff, you know, extremely bullish. And it's kind of why I thought, not just gold and silver, but the miners, okay, they were under-owned relative, but you know, if the markets go up, the miners go up sometimes, usually. But recently, if the markets go down, gold and silver go up, and you could see the miners started to follow gold and silver as you'd expect, because that's what they're based on, right? Companies that have higher earnings based on the metals that they're mining. So you have a case in both directions for the miners to go up. We went up because the metals recovered a little bit, but because the markets went up too. Okay, well, if the markets go down today, gold and silver go up. Okay, then we go up again. So, all right, you're not going to stay invincible forever, but you can have several trading days where you're basically invincible. It's rare, but I think we're in that type of environment. And it's just because this needs to be priced higher. And I still think that we're going to go up here. Now, I was less certain on Friday, I must admit. And that's why I trimmed some 10% in most of my miners. But this is definitely in play for me now. You know, if we have the gold and silvers just sort of going sideways, imagine they don't, you know, gold doesn't go to 1930, but it doesn't go to 2000, just sideways, you know, just sort of, you know, today, whatever, close a little green, tomorrow there, then there, nothing special. Silver, let's just give the opposite scenario, up and then down, whatever, a little snake. But the miners, what do? They just sort of go up. I would love that, you know, minus up relative to gold even more. But up here, I don't care what's happening. I'm taking a bit of profit again. Maybe another 10% across the board, just to say, okay, I've done it. I've sold that zone. Now do what you want. Go all the way back down again. Fine, then I've sold, you know, nicely here, and then I'll buy back here. Or most likely, actually, we start to go up again with gold and silver just making new highs and staying at new highs. You know, what if gold is now at 2,100 and it's not retracing? It's just basing sideways for another launch higher. And the whole world is watching. Oh my God, gold is the only thing, not the only thing, but you know, silver then is up here, starting to go up. Then I'll leave it and say, okay, I'm waiting for this bigger move now. I don't care selling here 2 times 10%. Fine, little trim, and now I'm happy. Whatever happens, if we go higher, we go higher, and that's definitely in the scenario. So the GDXJ are looking bullish. They could definitely go up to this next level, whether the markets go up or down. Gold and silver have their own sort of chart pattern. I've covered those. But for me, I'm going to trim a little bit here and let the rest ride because I know exactly the potential we have here. We can go all the way up here and then go even higher because where does GDX and GDXJ belong? Well, if you really want to be precise about it, they belong at least here because that's where actually no, gold is not there. Gold is, as we know, all the way up there. I'm not saying they belong up here, but they kind of do. Now, GDXJ is an extreme case, but GDX is not, because these are senior miners that should be all the way up here, you know. So that's why I'm not willing to sell too much and get too aggressive on the sell side, because I know the potential and the macroeconomics behind it. Anyway, that'll do. I'm not going to cover Bitcoin. I've already covered the banks. So let's see what happens today. I hope that was of value.